Happy Wednesday. This is an end of the month update on my attempt to trade a $500,000 portfolio to $5 million. What a month it's been. The Dow shook out the worst week in the last 8 months to end the month flat, down a modest 0.2%. The S&P 500 ended the month up 2.3%, and the tech-heavy NASDAQ composite ended the month up a whopping 5.6%. If you panic sold a few weeks ago when the Dow had its worst week in the last 8 months and are kicking yourself for missing out on the latest rally that brought all three indices to its all-time highs or near all-time highs, then feel free to click on the link I provided to watch why you should never panic sell and what you should do instead. Now, before I go through my portfolio's performance, please note that nothing I say in this video can be construed as financial advice. I am not a financial advisor. This series is made solely for your entertainment or educational purposes, where I trade my own funds utilizing my own strategies. Now, let's take a quick look at how my portfolio is doing since I started this series on June 17th. As you can see here, the total value has increased to $532,000, or a gain of $32,000. This equals around a gain of 6%, or an annualized gain of $836,000, or an annualized gain percentage of 156% if I were to keep the momentum for the rest of the year. My best assets are the QQQ 2022 March expiration calls, which I have two. The ones that have a strike price of $325 are currently up $15,000, or 27.6%. And the QQQ March 2022 expiration calls with the strike price of $355 are currently up a whopping 40%, or $1,400. My QQQ puts that I sold are also doing pretty well. The March 22 expiration QQQ puts that have a strike price of $310 are up almost 19%, whereas the June 2022 expiration QQQ puts with a strike price of $320 are up 15%. All of this is expected as QQQ itself has gone up almost 4% over the last 2 weeks. With respect to my non-option tech portfolio, which consists Apple, AMD, Amazon, Facebook, Google, Microsoft, Netflix, and QQQ. Every single non-tech stock in my portfolio has been up since June 17th, with AMD being the best performer, currently up over $1,400 or 11%. Netflix is up 7%, and each of Facebook and Microsoft are up over 5%. The best non-option stock in my portfolio over the last 2 weeks is actually a non-tech stock, FLSR, or First Solar, which is up a whopping $1,573 or over 17% since June 17th. As you may recall, 2 weeks ago I sold a July 16th cover call for First Solar with an $82.50 strike price, which happens to be my worst performer. It's currently down $752 since June 17th. Although, in all else being equal, my portfolio would be better off if I didn't sell the cover call 2 weeks ago. Keep in mind that the reason that I sold the cover call was because I wanted to sell First Solar 2 weeks ago before the $1,600 or almost 17% gain. So instead of selling First Solar 2 weeks ago and missing out on the $1,600 gain, I sold a cover call to collect a premium of $128 and still give First Solar enough room to move above the price per share that I purchased First Solar for before hitting the strike price. Further, if you add the gain from the underlying security of First Solar to the loss from the cover call, I'm still up almost $850 or 8% since June 17th. Moreover, there is still 3 weeks till expiration and plenty of time for the price of First Solar to drop below the strike price of $82.50. Alternatively, I can roll out the cover call, such as by closing the current position and selling another cover call that is further out from expiration to collect additional premium and to pick a strike price that is higher than the current strike price to allow First Solar additional upward movement. Let me know in the comments below if you would like to see a video on how to roll out a cover call or a naked call to avoid assignment. Overall, and despite my First Solar cover call being down, cover calls are still a good strategy to hedge and to collect premiums. Lowe's is my second best performing non-tech stock and is up over 4% since June 17th. The demand for home building and home improvement supplies are at an all-time high and will remain high as long as the demand for homes remain elevated. And I don't see a reason for the demand for homes dropping anytime soon. Goldman Sachs, which announced that it has increased its quarterly dividend to $2 a share, is up over 2.6% and has been up over 27.8% since a cover short put I wrote on Goldman Sachs with a strike price of $300 closed in the money earlier this year, and I was assigned 100 shares of Goldman Sachs at $300 a share. Click on the link I provided if you wish to learn how to make money like an insurance company by selling calls and puts and collecting premium. Looking ahead and towards the second half of the year, the biggest headlines will be inflation and how much higher the market can go from where it is now. As far as inflation goes, I think tech stocks have already had its inflation trigger dump in February and March, when many of the biggest tech companies were down over 15% from their all-time highs despite reporting record earnings. At the end of the day, stock valuations are based on earnings, and more particularly better than anticipated earnings. In that regard, I think big tech will continue to report record earnings that beat top and bottom expectations. As such, I'm still looking for opportunities to increase my positions in Facebook, Google, and Microsoft. Outside of tech, I'm looking to increase my positions in Goldman Sachs, Aflac, and ExxonMobil. Goldman Sachs and Aflac are in sectors that are moderately inflation resistant and actually benefit from a rise in interest rates caused by moderate inflation. With respect to ExxonMobil, the demand for oil will continue to rise as the world exits out of the COVID lockdown and summer travel season heats up. I'm sticking with my prediction that the price of ExxonMobil will surpass $70 a share before the end of the year. Let me know what your strategies are for the second half of the year and whether you plan to reallocate your current portfolio. As always, thank you so much for watching, and please hit the like and subscribe buttons.